Hey, everybody. Corey Schrader, Black Creek Wealth Management. Just wanted to go ahead and update you as I said I would here on Wednesday of my weekly trades. Again, I'm going to do this at least, 2 or 3 times a week just so you can get an idea of how I look at trades and just ultimately what I'm looking at with the overall market so I can help you, try to make a little bit extra money if you're interested. So just want to run you through. If you remember, I started out talking a little bit about individual stocks, doing some spreads, and shorting just the overall market. So let's go ahead and talk about Home Depot. That was my first trade this week. Went ahead and jumped on a put option, meaning that I bought a put option because I very much believe that this Home Depot stock is going to continue to decline. Not probably assuming to 280, but definitely wanted to see it hit this level here. Let me go ahead and zoom in. We're looking somewhere right around, I was saying around the 295 is really what I'm looking at. 295, 296. So I feel pretty good about that. So I went ahead and I jumped on a put option and went ahead and did it out to October 27th. So almost a month out. So 30 days, right? Plenty of time, gives the trade time to develop. That's a key thing here because time is against your side when you're getting in options. It could be for your side or against your side. I'm hoping it's going to be for my side. So I told you guys I got in at 460, got in a little bit high, wasn't overly excited about it, but I still felt good about the trade. So let's see what it is right now. So if I look at the trade, in order to sell it, I could go out back into the market and I can actually sell it back to them at $5.55. Now, I'm not going to factor in transaction costs, but it's really, really negligible, right? So what does that mean? That means that I have seen appreciation of, divide that by 4.6. I am up in 2 days, 21%. Okay? So as of right now, that is what that specific trade is showing me is as I'm up this week on that trade about 21 or so percent. Now, earlier in the day, it got as high as $6.40. Now, I could have closed it out, but still in the mindset that I still think it's going to continue on. So I'm going to let the trade develop a little bit more, and ultimately, I'll still take a 21% trade. That's not a bad deal for 1 month, right? Do that over 12 months, you're having a pretty good year, I'd say. So that's that trade. So let's go ahead and jump over to shorting the market. So let's talk about SPY for a minute. And this will feed into my spread trading because that is another heavy trade that I have on this week. So as I told you before, I'm in, so SPY is the S&P 500. It's just the index that most people buy into. If you have a 401k, chances are you have a mutual fund that tracks the S&P 500. So SPY is an ETF, very, very low cost, damn near negligible versus a mutual fund. So basically just using the market here. So what I'm doing is I'm actually what's called bearish, or I believe the market's going to go down. So I am taking the opposite side of this trade. So as opposed to everybody who buys this and hopes it goes up, I am selling against this and hoping it goes down. Now, do I believe it's going to be long term? No. I believe that it's going to hit this trend line here, and I want to take advantage of this downside run. Okay. So this is what I'm doing. So ultimately, I got in on the trade. If you remember back on, I think it was earlier this month, September 6th. So if I pull up this trade, and this is SPXS, this is the inverse of this. I got in at various dollar amounts because I dollar cost averaged in. Now, it's currently sitting at 1590. It got to a high of about 1615 today, but I'll take 1590. So what does that look like? Let's say we got in at an average price, I think somewhere, if I take the two, you're probably sitting right around 1425. I'll even take some gain out of this. So 15.9 divided by 14.25. That's an 11%, almost 12% gain that I've seen since the 6th. So 1 week, 2 weeks, 3 weeks. So right now, I'm seeing an 11% run up on this position. Now, this is one that I do for my market timing clients that I'm also, while this is great and all, I know it's not going to be long lived. So what am I looking for? I'm looking for opportunities to go ahead and jump back into the 3 times upside, which is UPRO. So I've been talking about this for a while now. I really do believe that the market's going to be coming down to about 42.50, 41.50. We're right at about 42.50 right now. So I'm pretty close to where I think things are going. I'm not going to try to time the bottom on this. My indicators right now are telling me that we're still on a weekly basis, still trending down. Momentum is still kind of holding, which is great, but I know that it's going to be short-lived here in a little bit. So I'm looking for crossovers, definitely still in an oversold mentality. I can see that momentum on a daily basis is starting to slow down, although from a day-to-day, there's a lot of noise there. So that's why I go to the weeklies. So that way I can look at more of a long-term trend and try to capture these long-term trends and just sit in the trend and let it marinate. You ever try to have a steak that hasn't been marinated? You don't taste the marinade. You got to let it sit for a little bit. All right. So that's what I'm doing on this one. And that brings me to my last one, the spreads. So if you remember, I talked about the spreads that I put on roughly at about a 3% gain for the week. So basically sold a put at 414. I covered my behind with 404. So I sold high, buy low, sell high. Sounds fun, right? Got in at 0.3, which is 3% on this trade. It's now at 0.15. So the gyration of this has been absolutely insane. I got in at 0.3. If you remember, at the end of Monday, it got to 0.14. Well, yesterday, market dropped, went up a little bit to about 0.3, so it got back to what I bought it at, or I should say got a credit at. And then today, it got as high as almost 0.5. So ultimately, I would have been down 2% on this trade on the week. Well, now I'm up 1.5%. And looking at how the probabilities are starting to play out, there's less than a 5% probability that the spread will even get touched. You get even closer to it, and we're talking about on Friday, it drops down to even 1.6. So again, I'm pretty optimistic that this trade should hold. Today had me a little bit concerned, to say the least, but I'm still watching this level here. The fact that it came down, fought back, there's a little bit of some supply and demand. There's a little bit of a tug of war going on right now with the S&P. People are trying to figure out when's the right time to get back in. But again, I got to be honest with y'all. High interest rates, high oil costs. You have the UAW that's striking. Obviously, the actors and the writers are starting to work through their stuff. You just have a lot of high input costs. It's going to put pressure on this stuff. And the longer they hold these rates higher, the longer we're going to feel more of this sideways moving market, which will be the best time to watch these gyrations. So just wanted to get that out there. Again, I think I'm having a pretty good week. Looking forward to it continuing. But of course, if you have any other questions, concerns, thoughts, make sure you comment below, hit the like and subscribe. And of course, feel free to share this with anybody else that you feel could benefit, because again, I want to help you guys make some money and do better than most of those people out there. So have a blessed day. Thanks again for tuning in, and I'll talk to you next time. Corey Schrader, Black Creek Wealth.